I'm Doris and I'm here to share with you about my stock account and today's market update. Today, my stock account lost $2,866 US. All three major indexes posted gains in January, and the S&P recorded its best performance in 4 years. The IMF Chief Economist, the global fight against inflation is far from over. First, let's take a look at my account. Today, my account, including the purse market price, has lost $2,515, which is a loss of 3.23% to $70,356.89. Today, the SQQ lost $1,625 to 39 and each share lost to $39.36. The RV decreased by 5.54% to $40.09, marked a total loss of $890 in my account. Today, the market posted a general gain. The Dow Jones Industrial Average rose for 1.09%. Nasdaq Composite Index rose for 1.67%. S&P 500 rose for 1.46%. The auto industry showed a great gain today with more than 3% gains, and the internet and the software, the tech stocks, all rose for more than 1.5%. Recapping the performance of January in the U.S. stocks. The S&P 500 recorded its best January performance since 2009. The market continues to focus on U.S. earnings and the Fed's policy outlook. In January, the Dow was up more than 2.8%, the S&P was up about 6.2%, and the Nasdaq was nearly 10.7%, with all three major indexes recording their third monthly gains in 4 months. The S&P 500 index also recorded its best January performance since 2019. The Nasdaq posted its biggest monthly gain since July. The trivia rate. Research analyst Adam Parker said, I am most optimistic about the stock market at the beginning of the year, because the correction is mostly about the past and because people are becoming too negative. A solid January could bode well for the market and could signal a sustained rally in the coming months ahead. Historically, the benchmark index rose an average of 30% in the following year. Carson's Group Ryan Dietrich said in a tweet. But this week's busy earnings report could threaten the recent gains in U.S. stocks. Investors are watching the comments from the biggest companies closely to see what they are mostly worried about. In an environment of slowing inflation and consumer spending, industrial giant Caterpillar closed down 3.5% on fiscal fourth quarter adjusted earnings of $3.86 per share, compared with $2.69 a share earlier and estimates of $3.97. Revenue was $16.60 billion, up 20% from a year earlier, compared with an estimate of $15.88 billion. GM's reported fiscal fourth quarter net sales and revenue of $43.11 billion, compared with estimates of $40.51 billion. GM expects 2023 adjusted earnings of $6.00 to $7.700 billion. General Motors expects adjusted EBIT 105 of General Motors expects adjusted EBIT of $10.5 billion to $12.5 billion in 2023, and net profit of $8.7 billion to $10.1 billion in 2022. Markets are also watching the Fed's monetary policy meeting starting on Tuesday. Traders readily expect the Fed to raise rates by 25 basis points, but they're more focused on the comments from the Fed officials on how high they want to raise the rates or when they want to cut them. Mohamed Al Irian, Allianz Chief Economist, advisor, and former Chief Executive of Pacific Investment Management, said the Fed should raise its benchmark interest rate by 50 basis points at its meeting this week, citing policy risk management, intractable inflation, and the Fed's credibility. Al Irian acknowledged that the Fed is likely to cut the rate to 25 basis points, and they suggest, however, he believes in a larger rate hike would be a more cautious move, bringing the Fed closer to limiting its rate hike cycle. The IMF also called on central banks around the world not to stop raising interest rates until inflation is completely eliminated. While overall consumer prices gains have fallen in many countries around the world after lowering energy costs, the underlying pressure may not yet peak, said Tobias Andrian, head of the agency's Currency and Capital Markets Division. He said that this meant that the risk of insufficient monetary tightening was still higher than excessive rate hikes. The top priority for global central banks is to bring inflation back to target levels. Stick to the end and continue to tighten policy is, of course, what we want to see. In overseas news, the Eurozone announced a surplus of 0.1% increase in GDP in the fourth quarter. Total domestic product of the 20 Eurozone countries rose 0.1% from the previous quarter, down from the previous forecast of negative 0.1%, and down from the previous 0.3%. Better than expected economic performance and continued rise in core inflation could cement the ECB's hawkish path to higher interest rates, with ECB officials seeing inflation as a greater threat to the economy than a recession and monitoring falling over prices. IMF Chief Economist, the global fight against inflation is far from over. We are far from winning the fight against inflation, IMF Chief Economist Oliver Grinchas said in an interview on Tuesday. We got some good numbers. This is encouraging. That is going in the right direction. In Singapore, the IMF released a quarterly forecast that the global economy will grow 2.9% this year, slightly higher than its forecast in October. He said, it will remain a challenging year with growth below the average of the past 2 decades. Inflation just starting to fall from its peak, and core prices likely to remain high. He explains why the agency raised its global growth forecast for 2023. The IMF estimates that overall global inflation has peaked last year. It predicts that 84% of the countries should see a lower overall level this year than last year, and that as many economies will likely to have higher overall inflation and core inflation by 2024. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.